Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my market comment for August 31st. Today we get the EU-wide CPI. Yesterday it was announced that Germany's CPI unexpectedly decelerated by 10 basis points on a year-on-year basis in August. The year-on-year rate of growth slowed by 10 basis points. Now, the market forecast is for the Eurozone-wide CPI to accelerate by 10 basis points. But that forecast was made before the Germany figure was known. Now, the Eurozone figure tends to follow the German CPI, as you can see from the graph. So it's possible that the figure will disappoint the market consensus this month. The red dots on the graph show that since 2009, when the year-on-year rate of change in German inflation fell by 10 basis points previously, that's the y-axis. The y-axis is going this way. The year-on-year rate of change in the Eurozone inflation has been anywhere from unchanged to minus 40 basis points. That's the x-axis. Nonetheless, the graph also shows that there were months when the German CPI decelerated, but the Eurozone-wide CPI accelerated. So really, either is possible. Then, when the U.S. opens for business, we'll get the crucial ADP report on U.S. payrolls. While the report, in fact, isn't that great at forecasting the monthly non-farm payrolls number, which comes out on Friday, it's still widely watched for just that purpose. As you can see from the graph, actually, the ADP report is better at forecasting the final non-farm payrolls than it is at forecasting the initial NFP, although it's not really that good at either. In any event, a figure of 175,000 for the ADP report, like the market's expecting, would probably be enough to lift September U.S. rate hike hopes and thereby firm up the dollar. Canada's GDP is expected to accelerate in June. While it won't be enough to lift second quarter GDP on a quarter-on-quarter basis because of the disastrous April figures, it should reassure investors that the country is on the recovery path and there's no urgent need for the Bank of Canada to cut rates. So the figure may be positive for the Canadian dollar. The weekly U.S. oil inventory figures from the Department of Energy aren't following the plan. Crude inventories are rising, whereas the usual seasonal pattern is for them to fall until the next to last week in September. Nonetheless, the market has taken heart from the fall in gasoline inventories. These are forecast to fall by 1.25 million barrels over the latest week. Now, the American Petroleum Institute figures released overnight did show a rise in crude inventories and a fall in gasoline inventories, but oil prices fell anyway. So it's hard to say what impact today's official Department of Energy numbers will have on the market. Then, overnight, China starts off Thursday's release of the final Purchasing Managers Indices, PMIs, for August. The official manufacturing PMI is expected to slip a bit further below the 50 boomer bust line, while the Caixin market version is expected to fall even more, but to remain just above the line. Either way, it isn't good and could provoke further weakness in commodities and weakness in the commodity currencies. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.